GMGMU. Welcome back to Get Real with Mu Digital. We've made it to episode 5. My name is Patrick, and I'm here with my co-founder and co-host for tonight, Cholo. Tonight, we have something special for the audience. It's the first time that we brought in a fellow guest founder. He is a fellow Monad builder, fellow Monad Madness participant, and fellow Onchain yield junkie. We have co-founder and CEO of Accountable, Wojtek. Wojtek, welcome. So we call this podcast Get
Yeah.
Real because we want the unfiltered takes on Web3, what needs to change, and how we're all helping to build the future together on chain. So maybe we just start from the beginning. We like to start diving first, sort of in your own founder journey and how you made your way into Web3. So, Mine, can you take us through your background and how you made your way to where you are today?
Yeah, thank you, and glad to be the first founder on the podcast. Actually, need to catch up with your previous episodes to see how I landed in the end in the mix of all of these individuals. But yes, correct pronunciation of my name. My name is Wojtek Pawlowski, to be precise. The name only exists in Poland, so it's a bit problematic. When I go to Starbucks, I have my alter ego Peter to make it a bit easier, but I very much appreciate when somebody puts the effort to at least try to pronounce it properly, which is not easy, so kudos to you. I'm from Poland, as said earlier, originally from Warsaw. Was living here since till I was 18, and then I moved to Amsterdam to study there quantitative finance. Really wanted to work in the trading field. Realized that even with pretty decent mathematician background, I'm unable to compete with Oxford PhD mathematicians. So unfortunately, when I applied to couple of the market makers like flow traders, I realized that's not my crew. My soft skills or can compensate lack of ability to create the best algos in the world. So then I decided I probably need to do something else. In crypto since 2017 on a personal level, maybe to add since early 2017, because obviously a lot has happened during that year. ICO boom and bust cycle was something that caught my attention, and I made some money, lost a lot of money, but that was the trigger that I really want to get involved in the space professionally. And if I'm gonna get a chance to try my luck again with the next cycle, I should do way better. And in 2020, I was found by Maven 11. It's a European venture fund based in Amsterdam, fully blockchain focused. They found me on LinkedIn because I wrote my bachelor thesis about ICOs, then master thesis about Bitcoin and how it compares as a safe haven versus other precious metals and so on. I was always trying to signal that I'm interested in the topic when it wasn't that trendy yet. And they saw, oh, quantitative background. Maybe he can help us on our trading side with our liquid desk. It was a very small organization. At that time, we were managing only like 15 million. I was their second employee. And shortly after, the music started to play. Bitcoin was below 10K, and basically since I joined, it was up only. So I also had a bit of luck that I came at the right time. But timing in life, it's sometimes more important than an actual skill. Did some things on the venture side. For example, I was responsible for our investment in Olympus DAO. So some of the OMIs are maybe listening to this podcast, but it was a great way to understand how the DeFi native ecosystem plays, how communities actually can be run where you feel like you belong somewhere and you spend your own time on hanging out on Discord. I think these times are unfortunately gone to a large extent. But the amount of innovation that was there at the time was a brilliant way to get even deeper in the space. And yeah, maybe to not make it too long, I was part of the credit team later on. I was managing the credit arm of Maven 11 because we made an investment in Maple Finance. Now having its big comeback, but I was there since 2021, effectively being a so-called pool delegate where we were lending funds to market makers in the game. 2022 came, big lesson: don't trust self-reported claims, don't trust spreadsheets because all of these people may not actually tell you the truth. We lost the money, not all, but a significant chunk, and that was actually the trigger to build Accountable, to change how we are communicating with each other and how we are trusting each other. So that was the foundation of everything that we do today.
That's awesome. There's a lot to unpack there. Why don't I go first, and then Cholo, you can dive in a little bit. But one of the things that I really appreciate from your perspective, and we've talked at multiple cities at this point, from Bangkok to Hong Kong to New York at this point. But you've seen the different cycles, and I would say even Cholo and I have been in for a couple cycles, like since like DeFi summer. But you were there even like in the ICO boom. One of the things I'm curious is there's always new product innovation, even insofar as yield products. And you kind of briefly mentioned what you saw in the 2021 cycle. How much do you think that things have actually changed? People are releasing new types of products, but how much do you think yield products have actually changed in this current cycle?
So some things changed, obviously, like the sophistication of the products. It's definitely on a completely different level than it was back in the days, and we are moving away from only relying on on-chain yield sources effectively with counterparties like Lido, Aave, Compound, and so on. I think we are maybe not at the limit of what can be done in this side of the industry, but we are definitely stretching it every day. But what we are seeing, and why I'm excited about the space, because we are seeing like off-chain financial products being put on-chain, which obviously by far exceeds the market that we have natively on-chain at the moment. And that's how we are also positioning Accountable to be that bridge that can bridge the off-chain financial products to the on-chain world and let those counterparties run their business on chain. What unfortunately didn't change, and that's the worrying part, and that's what we are trying to push from our side, is that people believe that if there is a token to a product that originates off chain, that's enough because like you're earning some performance, you have you clicked mint, you received some token, the money somewhere it's producing some APY on your behalf, but 99% of people don't think that they are actually wiring the money to a third party, and they are hoping that this party actually does the job that it's described as what they're gonna do. And the black box mentality that we saw in 2021, 2022, with all of these counterparties where you were sending the money and hoping that you're gonna get it back, it's unfortunately very much present. And just because something is wrapped in an on-chain token, that doesn't mean that this entirely reflects the actual activity. So this is worrying, although the space is maturing day by day. Stuff like audits, even like financial attestations, becoming the new normal. We are pushing for more. We believe that everybody should be entitled to see that their money is productive in a way that they hope it is. And you don't need to reveal as a financial product owner your secret sauce to prove that you're doing, broadly speaking, a good job. And I believe there is a similar analogy to the 2017 cycle. Back in the days where there were ICOs, and that was also part of my thesis, how to spot characteristic of an ICO to know or to have a better feeling that on day one of exchange listing, this is going to perform better than another ICO. And one of these things that I proved that sort of adds to the equation in a positive way is ability to show that you have a smart contract audit. It was optional, believe it or not, back in the days to have a smart contract audit. And if a counterparty had this audit, it was seen as this green flag. Look at me. I'm signaling to you that I'm legit because I put this extra effort to comfort you that I'm not a party that tomorrow will disappear. So right now, nobody would give you a cent if you don't have a smart contract audit. It's basically like a foundation to run your business. We feel like with our verification, it's very similar. At the moment, counterparties that use it, they are signaling to the market, look at me, I'm proving that I'm doing good things with your money. Don't chase extra 1% APY and go somewhere else where you're gonna face a black box. Come to me and sleep well at night. But in the future, when you're gonna have million yield opportunities and half of them are verified and half of them not, I believe it will be very similar to smart contract audits where people will ask you, why the hell would I give you any money if I can go to a party that proves to me that I can sleep well at night? So maybe that answers the question.
No, I think it's interesting, and I always find it kind of very encouraging when founders, after getting kind of like a bad experience in crypto, I would say, they don't really necessarily say like, oh, I'm gonna quit crypto forever. Like this is a scam. This is like all nonsense. But they actually turn around and say, hey, actually, this is a solvable problem. It's either a tech problem, it's a BD problem. Let me try and attack it. And I think that's quite encouraging. How you kind of like, yeah, you saw it firsthand how things can go bad with people being non-transparent, and like just decided that hey, I will solve this problem, or try to be the solution to this problem. So in that sense, I guess, like as you kind of go through this journey, do you feel that people now kind of, especially now in a bull market, people now do see the value of it? Or do you think it's just something that they pay lip service to, but when meme coins are going like 10,000% every week, do you think that goes out the window? Or is this something that, yeah, it's always an
somewhere in
interesting kind of question.
between.
Yeah.
It's somewhere in between, right? Because like with some of the counterparties that we deal with, and that's on a very institutional level, like they show their financial products to, I know, JP Morgan, to pension funds, and these guys don't care about meme coins, right? So obviously, if you are if you are trying to attract capital that is very DeFi native, like my language may not be, the best for these people, because I'm not telling them how tomorrow they're gonna make $1,000,000. I'm telling them how I can potentially prevent them losing their capital and potentially making a fair yield on top, which is a different value proposition. So I would say my messaging lands well with these very institutional counterparties and this very much like Web 2.5 fintech people that maybe would like to get an exposure, but they are in the end, not a party that will put cash directly to Etina or to any other financial product because they don't care, they don't have means to do it, they're not gonna have their own wallet and so on. They would just like to get exposure to a yield that beats their saving rate. So the answer is in between, basically. I'm not competing here with memes. I think they are part of the culture, but as we saw a couple of months ago, like the boom and bust is something that you need to deal with, per se. And I'm building something that people can rely on if they want to participate in, like very much institutional financial products, and that wouldn't be available to them without blockchain technology, effectively.
Yeah, and this is to your point on sort of the different market segments. I think this is something in this cycle which we really haven't seen at scale. There were institutions, but there were crypto native institutions, in the last cycle. This one you're starting to see, quote unquote, the suits, the TradFi guys coming on chain. And full disclosure, Cholo and I both came from those backgrounds. We've just been playing around in DeFi for a while, right? So, we often tell our community that we start with not all yields are equal. and must understand like what's underlying that yield. We believe in the different types of innovation in DeFi insofar as the composability, that if you want to strip the interest rate off of the principal on a yield and trade that, sure, like you should be able to do it as long as the base is a stable yield, right? But where do you draw the line? Because if we think about last cycle, like yields, like people are talking about in the order of like 70-80% yields. Like people assume that that's like a yield number. In TradFi, if you can get a 20% yield, you should be running your own hedge fund. I mean, that's a fantastic yield, on an annual basis. What is your perspective on the yield expectation, or where this goes over time? Because you still see things out there that are marketing 100% yields that will not deliver, 60 days from now.
Yeah, so a very fair point. And again, as a party that participated in Olympus DAO, and that's all like 10 million APY, I know the point. But also, if you think about it, there is, by the way, a great website called Stable Watch, run by my friend, who actually created a new metric, yield paid out, because you can advertise that I'm generating 100% APY, but did you actually pay it out? Like two different things. Like the headline APY can be completely different than what you actually receive to your wallet. And that's what we are also trying to change, that like prove your performance and show what it really is, and not like just say I'm going to deliver 100% APY. Oh yeah, by the way, if the FDV of my token at TGE will be $1 billion, then probably anybody can say that they can deliver this type of yield. So I think like the expectation of the market is changing, and people already know that this type of yields are no longer feasible. Also back in the days when you were launching another Uniswap copycat with a fake reward token on top, like this was pumping, right? Because everything was pumping, but these times are also over. Like, especially that's why it's relatively hard to raise money right now, because how these VCs can get convinced that after a 5-year lockup, your product will actually be somewhere and not at zero mark effectively. Because if you're only planning to incentivize people with a token and don't create an actual demand for it, like it's going nowhere. So if you're a bit more sophisticated, if you went through a couple of farms and saw what you actually got, run some numbers, you will realize that you never got the 70% in the first place. Another thing is that if you want to do things at scale, like if there is a pool that offers 70% APY with even 1 million TVL in it, like if you're serious, right, you probably would like to at least double that or triple that or put 10 million in. And obviously this number will merge to the base yield, which is much lower than that. So I think what we should focus on is to deliver reasonable premium at the scale versus TradFi, because these TradFi entities, like even banks, they have such cheap cost of financing that for them, capturing a spread of a couple of percentage points is tremendous. And we need to create an infrastructure to let them do it and be happy about it.
No, I love that. So it leads me to my next question. Maybe I'll ask this both to Wojtek and to my co-host Cholo. So importantly to your point, we also always say you should only build a product if there's demand for it. So at the end of the day, if you're not doing that, it's all smoke and mirrors, right? So what yield products out there today do you actually like and do you actually use in your own portfolio?
Cholo, you want to start?
I can go first. I'm very conservative with regards to my on-chain activity. So I guess I in the recent kind of like run, I did participate in a couple of ICOs. I mean a couple of airdrops, but I found that it does. I'm not to say that it's not a profitable strategy. I just find that with my own kind of investing style, it does require a lot of time and requires a lot of research to understand what the APY is, how to do the looping strategies, and how to kind of like maximize the outcome from the airdrop that any of these protocols are launching. So personally, I've been a bigger user of more safe protocols like Pendle. So Pendle PTs are kind of like what I primarily use for myself, because it is a way for me to essentially sell my points to people and essentially like allow all the airdrop participants to trade that, and then I just get the fixed yield. So it's a good way to kind of just keep stacking stable coins if you want to be it to be a very passive kind of strategy. So I've been more of a fan of those kind of like products, and I think it serves a very specific kind of niche where I guess it is a great product overall in terms of just allowing for yield trading as a new primitive in DeFi. And I think now you're seeing a lot of innovation in that space because once they kind of created that product and kind of proved to the market that that behavior and that activity has a use case, now there's kind of innovations building on top of that. So I guess bringing it back to kind of the yield conversation, I do think that right now, if you compare kind of like the diversity of yield products in TradFi to what we have in DeFi, it is still, there are still kind of products that exist in TradFi that don't exist in DeFi. And I would say it's only a matter of time until those kind of get their own flavors of on-chain versions that get launched. I think there's already kind of like yield futures that are being launched, i.e. you can speculate on funding rate yields and whatnot. And I think it's just going to be a more interesting space moving forward.
Yeah, I fully agree, and I'm similar. Like, to be honest, like back in the days, I think airdrop hunting, in general, being early in protocols was way more rewarding, which makes sense. We were just way earlier than we are nowadays. Also, what changed the dynamic fully was the Ribbon Finance fuck up, because this was the first case where, because of insider farming, effectively the rules of the game changed. So airdrop farming was, ended in terms of like how profitable it was. Basically, whenever you went somewhere and provided even $1,000, you could make life-changing money. Of course, hyper liquid is in contrast to what I'm saying at the moment, because people made crazy cash with it as well. But I think the trend is clear. Like every other airdrop, the expectation of making money of it, it's only going down. But coming back to my preferred choices, like I will be biased, but I think it makes sort of sense. So I'm only actually allocating cash personally to the products that use my verification or use accountable verification, because in the end, there are so many different yield sources and I'm relatively busy. I don't want to think every day what's happening there, follow, I know, community news, some chatter on Twitter, whether somebody is still alive or not. What I want to do is I want to go to the dashboard, receive an information that I can trust. These guys are doing good job with my money, and I want to make my passive yield. So some of the examples of it are basically yield-bearing products that we are working with, like Noon or Aegis, a bit different profile. Tokenized, like a yield-bearing product, doesn't need to be a basis trade solely as Etina is. For example, Noon, at the moment, it's yielding around, I believe, 16% APY, which I believe, understanding what's under the hood as a person that enables that verification, is very compelling, especially if you can, also boost the yield with some on-chain strategies that there will be some markets on Morph and so on to do it. But the underlying is like Noon, for example, deploys cash to Alpaca. It's a US brokerage account. They're buying treasuries with part of their cash. Okay, that's not what makes the 16% yield, obviously. They also allocate cash to Fasanara. It's a private credit fund in UK, couple billion AUM as far as I know. And they are basically able to extract this this value from this private credit fund. That allocation to it, it's obviously also verified that it's there, that the money's there, and what's the underlying portfolio. So that's something that that I'm looking for. I'm looking for products that are earning good yield in the benchmark of 10-20%, which is innovative, and potentially, if there is an airdrop component to it, being early, providing the capital and earning some points on top, that one day there will be something out of it or not. That's my perfect match.
I love that. I love that take. And pro tip, I'm not going to drop too much alpha, but check out for potential collab between the three people on this podcast coming soon to you. We could talk about yield for the whole show, honestly, but I'd love to get your take on, there's a lot of interesting stuff happening right now, particularly around our space. Tokenized equities. So Cholo and I got on a podcast a couple of weeks ago and basically dunked on them, but curious your thought on tokenized equities, how it's different from what you saw in the last cycle with synthetics and things like that, or just your current take on the new innovations coming both from Web3 and Web2, really.
So listen, you're not gonna hear anything very sophisticated from my side on that topic. I was never a user. I know that I have friends working at, Gains protocol, right? It's one of the perp dexes. Apparently people were, going with 1000x leverage on Tesla stock on a Sunday night, and they were very happy with it. I never felt like because I also traded personally. I always thought like, this is not my world. If anything, I have a bigger edge in crypto. So I was never really an active buyer of any stocks, to be precise, which is probably a mistake. But all in all, I think my take is that there is a lot of platforms that made a whole product about tokenization of stocks, and they are probably in trouble, right? Like if I can buy a Tesla tokenized stock on Kraken, why would I go to some random party that offers me the same? So I think this will be very much centralized in the hands of a couple of big parties, where the most liquidity will be, and people that are probably actually more crypto native, that were using that, they will be using it. Maybe some new counterparties that wanted to tap into this world will join. I actually bought some stocks during the crash this year on my Revolut app. I paid for it $0. I bought my Nvidia at the low, exited too quickly, but it was just some testing, let's say. And I enjoyed the experience. To be honest, I don't need anything else. I don't need crypto for it. So I don't know, like maybe there are some use cases that I'm not seeing, maybe some pair trades that you can do, some cool strategies around it, probably some portfolio management that I'm too dumb to understand or know that these strategies exist. But probably there is a value to have both in one place and trust that, yeah, this is really the underlying and I can do something with it, but I'm just not the guy to judge that per se.
No, not at all. I think at the end of the day, TVL tells the story. So it'll be interesting. Like we are interested to see how this plays out over the next 30, 90 days. But at the end of the day, it all comes down to demand. So if there's demand, it'll.
And survive. Is there a demand? I actually didn't check it. Is there some heavy? No signs of.
Not heavy. I haven't looked at the numbers this week. But not that I've heard, and not that I've from just sentiment. From what we're hearing in market. Let's see, but it's still early days. So let's see sort of how these products play out, and a lot of different flavors. People have tried it in different jurisdictions and with different restrictions and whatnot. So
I think it makes sense in terms of composability, right? If you can create a nice market and put S&P tokenized as collateral and borrow against it, right? It's another way to create more financial structures around assets that people hold usually. So it makes sense. Let's actually think about putting this to a productive use, and maybe we can create some nice financial product out of it.
Not to go too deep on it, but what we discussed in the last pod is if the base layer will be stable on weekends, because it's still a 24/5 product. And so the ones taking the risk on the weekends are market makers. And of course, in periods where there's any sort of news over a weekend, the bid-ask spreads are going to blow out. And then if you're caught holding a position, in a levered position, good luck. Good luck on Monday morning.
Yeah, that's true. It's like decorrelated from each other in terms of.
It's decorrelated from the underlying. Yeah.
And the other thing is
so that's not great.
Yeah, the other thing is like also might be useful for you guys and accountable is that a lot of these tokenized equities are actually not the actual equities. They're essentially debt instruments issued by kind of borrowers that say like, oh, I bought like this much Tesla stock or I bought this much Nvidia, and I'm going to issue the same amount on chain. But with these things, it's kind of like, yeah, trust me that I have that in the custody, right? So it's to
Yeah,
me,
I
it's
know,
one of
and
those.
that's our target.
Correct. It's like one of those things where hidden leverage can come in, and yeah, that more transparency to show that the reserves actually match the outstanding is probably needed as the space evolves.
Yeah, I agree. In the end, that comes to my earlier argument, right? Just because something is wrapped in a token, like that doesn't mean it represents what's happening somewhere there at the centralized venue. So, no, very much aligned. Obviously, again, reputation. If Kraken is doing that,
Yep.
then in theory, who I am to tell them that they are not doing their job? They are regulated there, right? So, yeah, that's something. But then the smaller players actually, again, the argument of seeing the solution as an edge, maybe they can come in and say, with us, you can actually see we are buying it. With Kraken, you can only trust their word. But we don't see that yet. Nobody's knocking to my doors to do it, unfortunately. So, guys,
Not
please
yet.
come. We can
Not
do
yet.
it.
They're all coming soon, Wojtek.
Okay.
All right, one more on markets, and then I want to switch to another line. But digital asset treasuries. So this is a hot take. TradFi, Web3 valuations are crazy. What's your take? And maybe both for Wojtek and Cholo. I'm curious your guys' take on where this is today and how sustainable this is.
I think short term it's bullish for the prices, and I think this is probably not going away unless some catastrophic scenario with one of these, and the rest will be falling down like a good old chain. But I think it is establishing some sort of trend that like actively managed digital assets can be run by these counterparties. I believe actually we should bring them on chain and let them run those strategies that with time should become even more sophisticated, right? Like they are flagging right now, oh, we're gonna stake the asset on your behalf, right? When the ETF, like staked ETF will come in, like what's your value per se? They're saying, yeah, because like they cannot stake it all, blah, blah. But these are marginal things in the end. What I would like to see, it's more of this like active performance in things that are actually making the security of the underlying chain more interesting. Maybe using some other financial products as part of the mix to differentiate yourself more from this ETF that just buys the thing and says bye bye. So I think it's good for the market because out of nowhere we basically got a bull market based on a couple of counterparties one by one, trying to play this game. How quickly sentiment can shift from Ethereum being like a no-go grant that nobody wants to talk with, to now the sexiest asset in the whole industry, right? So I think we should be all grateful for it, at least in the short term, because like our prospects are looking rather more colorful. I don't know if this has like long legs. I don't know if this may be direct translation of a Polish saying, but I don't know if there is a place for these counterparties in the next couple of years, if institutions will be able to exactly replicate what these guys do with the same type of assurances and control and security that they are used to. So it sounds to me like it's a short trend. Generally, probably nothing bad, brings more liquidity and adoption. Whether they will evolve to something more sophisticated to actually provide some more value, maybe, but also not an expert on that front. So curious to hear your take, actually.
I mean, I like the spaces. I agree with Wojtek in terms of like it's good short term for the market. It's good for pumping our bags, but as with anything that's kind of very frothy and very kind of like speculative, it's good until it's bad, in the sense that this will become a very crowded trade as time goes. I think it's right now it's still quite, I would say, pretty early. Like you're starting to see just the initial movement from the Bitcoin treasury companies to ETH to now some are doing it with Hyperliquid, some are doing it with XRP, BNB, Dogecoin. Everyone's just gonna keep going down, keep going down the coin market cap kind of list by market cap. And at some point, I think depending on how these companies finance their acquisitions, if it's completely with debt, then that is just a ticking time bomb. Because whenever there's a big drawdown in the market, if they don't have continuous access to capital markets, unlike MicroStrategy, then you're gonna face some situations where they wouldn't be able to service their debt. They can't refinance on time. Then they'll have to either liquidate their holdings or go into bankruptcy. And I think that's just going to be like a potential cascading of dominoes. And you're seeing more and more kind of like I say companies with questionable financials going into the market and trying to do this strategy. I saw one that had like a revenue of 300,000 trying to do a $200 million XRP acquisition strategy. I'm like, all right, how does that math really work? So I think it's good for the narrative. I see a lot of potential irresponsible deal making that's going to happen just because people are chasing the narrative, and whenever that happens, then you kind of see the debt comes due a couple of quarters, couple of months down the line, and it will hopefully it's not going to be as significant the impact on price action, but who knows with how much liquidity is getting mopped up by these companies. It is kind of a very hard kind of dynamic to kind of get a good read on and what the potential impacts.
Yeah, so I'll put my TradFi hat on for this one, because one thing that's always true in the financial markets is if there's a trade to be done, someone's going to do the trade, and then everyone's going to pile into the trade. And so this really reminds me of the SPAC boom, just like a few years back, where essentially, for those that don't know what SPACs are, it's special purpose acquisition companies, but basically promoters are raising funds saying, hey, I'm just raising money today. I'm going to buy something down the road. I'm going to acquire some company down the road and put it in this publicly listed entity. But just trust me that that I'll find the company to acquire, and then two, it's a good company to acquire, right? So, but it was this was probably in 2022 or 2023 when every single investment bank on the street was pitching these things, and they were hot. I mean, there was a market for it, for a very finite period of time. And at the time, I was working for a corporate. I got pitched this by every single bank, and basically what I told all of them was like, you're going to be pitching this for 9 months. Like this trade doesn't make sense, and two, some people are raising money off this, but it's not a sustainable trade. So the dynamics are a little bit different on this particular trade. What's interesting to me is it's almost like TradFi people are saying, it's too hard for me, and I don't understand how to go on chain. What does it mean to go on chain? That I need some wallet where I have custody, and then I need to put it somewhere and click 2 buttons that says I approve it, and that's too hard. So I just want to do all this stuff off chain, and I'm going to pay you 2 times the valuation of the assets. It makes no sense, right? But it doesn't matter if it makes sense, because that's the way financial markets work. Like financial markets can be irrational longer than you can be solvent, always. It's just a trade that works now. It's interesting. I think it's super bullish for adoption of Web3, and I think it's great that institutions are now looking at crypto assets. I just think that the trade itself is a really silly trade. That doesn't mean that you can't make money on the trade and that you shouldn't try to make money on the trade. You should always just understand the market. I just think the trade's a silly trade. That's my personal opinion.
I think it's
let's
reverse.
Also not,
yeah.
Oh, sorry.
Sorry, I just want to make a comment. It's like it's reverse tokenization, whereas tokenization guys like us, we're trying to bring off-chain assets on-chain. This is the other side. They're wrapping on-chain assets, which actually move faster and have higher velocity, and spitting them out into like low micro cap companies that have questionable liquidity. So it is a wrong way trade, if you ask me, versus tokenization. Sorry, Wojtek, go ahead.
No, just wanted to say that what's maybe a bit alarming, because like we know how it is, as you said, when the number of people that are doing that accelerates very fast, then there is maybe something brewing that it's not entirely cool. And it's similar analogy, right? Like I know Etina was the first one to tokenize basis trade, and then they got the best deals, the best private deals. That's why they're able to keep this 6 billion TVL or more in, because people are locked for the longest time, because they offered incentives that were relatively smaller. Now, if you are a new protocol, right, and you want to do something similar, you need to do worse and worse deals. That's why some projects that they launched the TGE, it's down only because everybody gets out at the same time. So I'm wondering if similar analogy can be done to these type of companies, that why I should buy my ETH through you if I have 10 other options. Maybe this party will offer something that will actually break the system finally, and will be net negative, because I'm hearing almost every day somebody buying BNB, somebody buying this, and usually, you don't notice it until it's too late, but when something increases so much so fast, there will be some bad apples, and that will put in question all of the rest, because there will be one bad one. The rest will be at risk. Everybody will start speculation that there is something wrong with them, and the domino will start collapsing then. One Michael Saylor was already a target of many speculations, right? And now you can do it times 20, times 30, times 50 to all these other players that are much smaller than he is, as you pointed out. So I know, and hopefully we can survive a couple of months, the prices can go up, and then we will be telling people that we never learn, it's always the same, and we'll try to rebuild the system and make it better till the next time.
That's the way the cycle goes, always. Let me switch topics for the next segment. We do have a lot of founders in our audience. We're in an ecosystem of founders, in the chain that we're building on, and I think there are a lot of aspiring founders in the audience potentially as well. So curious to get your takes on, your own learnings, since you've been at it, and in your journey in Web3. So what's something that people get wrong about being a Web3 founder?
That it's a money-making machine, that you launch the token and your life changes and everything, it's cool. In fact, token is also a big liability, I believe. I never had one, but I heard from fellow founders that token actually becomes your product. And if you don't have very good executed business foundation, and if you're unable to have a split focus, you're gonna end up just trying to pump the token and nobody will care, and then you will just give up. So that's number one, that like token, it's not an access to easy money and creating your own so-called casino and your own rules, and that everything will be fine afterwards. So many things can go wrong, and in fact, if you look at all of the launches this year, you're like, what the fuck am I signing up for? Right? Like, you're just gonna, the chance that you're gonna reinvent the wheel and not be down only, there is no magic formula. You just need to be good at what you do, and 99.9% apparently are not. So that's number one. Second, like, it's super stressful, right? Especially when the company is growing and you were not a founder before. I will be honest, like when I had like 2 people in the company and we had like our weekly meetings and so on, there were like 2-3 screens on this Google Meet. Now when there is like 11, 12, and especially at the beginning, like all of these people are looking at you and you need to tell them something that A, sounds at least relatively smart, B, there is some action plan, and C, like, if things are not going according to the plan, like you also need to be prepared to tell these people goodbye, which you always think that things gonna only play out nicely, but it's a lot of eyes on you, a lot of responsibility on your shoulders, and you need to deal with it mentally. Of course, with time you get used to it, but it's definitely not sweet. And I think the most, maybe not traumatic, because that sounds like a bit too much, but like fundraising, it's also very brutal, especially at the beginning. I had this benefit that I was, backed as a guy from Maven 11, and I was lucky enough, again, timing, that Maven 11 became like one of the leading investment companies in the industry. I remember back in the days when I went to ETH Lisbon in 2021 and I said I'm from Maven 11, people looked at me like I'm a zombie or something, or like they didn't know what that means at all. So even with that support to prove to your people, to investors, that your idea is worth something, that they can bet on you, and you don't have a Harvard degree, you didn't work in TradFi before at big companies. I'm very crypto native and only worked at Maven 11 besides my own gigs in the meantime. So it wasn't easy, and the amount of slaps in your face that you receive, like you need to have a very thick skin, because at one point you really start to believe that what am I even doing? This doesn't make sense. And when you get that answer like 100 times, you really start to believe that maybe you're not worth it, you're not good enough. And then one day comes, and from a conversation that was, looking horrible, these people are saying, yeah, let's put in 500K if you want us, right? Like if I would be, cherry picking. So effectively you need to open up for having luck, have amazing timing, and be consistent in what you do, but also be able to iterate on what you hear from other people. For example, we started as a pure equity business, and only with the verification side of things. And the truth is, if you're trying to raise an equity round at 10 million valuation in crypto, you're just not fitting, because it's either Coinbase raising or Fireblocks at $1 billion valuation equity round, or you need to have a shitcoin, right? But instead of just slapping shitcoin on a product that doesn't need it, think how you can build a bigger vision and how this token could play a role that makes sense, that it's not forced, and so on and so on. So this feedback, it's also for you as a founder, I believe, to take a step back and maybe rethink whether your approach actually makes sense, especially if those voices are coming back more than once. So yeah, basically life of a founder, it's pure struggle. Sometimes a big or smaller success with 2 glasses of champagne or more, but then that's like 1 or 2 hours, and then you wake up the next day and another set of challenges comes, and it never ends. So you're either okay with it or don't even try, and it's always worse than you assume, but it's also a big pleasure and something that drives you every day if you truly want to do it and you truly love it, I guess.
No, I love that response, and I think Cholo and I, would 100% agree with what you said. Those words might have came out of our mouths, but the one thing that I will say is, to your next success, it'll be 1 or 2 bottles of champagne, not 1 or 2 glasses. So we'll share that with you in the next one.
Yeah, we can.
So to the positive side. So what's one piece of advice you wish someone gave you before starting Accountable?
I had something on my mind before, but now I a bit lost it, so we'll try to figure something on the spot. So I think I was lucky in a sense, because my co-founder, it's a great match with me. But I think in general, like, don't marry a guy as your co-founder that is not aligned with how you see things, or it's not a good match character-wise. Because one day it really will come back, and I know examples of people that were like, oh yeah, let's create a company. This guy is next to me, so it's a natural sense. We like each other. But if you don't do a proper analysis and try to be a bit forward-looking, whether your personalities are, for example, matching each other in a proper way. So I know I'm the guy that talks and it's a bit louder. My co-founder Johan, a great match with me. He's a bit more quiet. He's older. He brings the TradFi wisdom. He's a genius in what he does in terms of engineering, coding, and so on. I'm a bit more laid back, crypto native, and more straightforward, right, and inexperienced. But so this, as paradox, this works. But if you would put 2 me's next to each other or 2 Johans, you will not have a good company. And then the drama with like splitting and so on, this will kill your whole company. So it is worth to have a co-founder very much, but make this decision not just because you like it or just because somebody is close to you and it's a great idea to create a company together. Things will never be the same between you as friends, if you're friends, as colleagues, whatever. And it needs to be a match that works, which is very hard to know up front, but like there are some rules that you shouldn't cross, and they are there for a reason. So if you have a lot of arguments with your buddy and you're both explosive and so on, these are probably things that you don't want to have as co-founders. And paradox is, the more distant you are first glance, probably the better match you are. I'm not saying this is a rule of thumb, but I saw even firsthand with some older projects when I was a student that the people that you trusted the most, that you think were the coolest ones, were actually the ones that you shouldn't do business with. So maybe that's the one.
One of the most amusing pieces of advice that we got, and Wojtek, you were there as well in New York when we were at the Foundry with Monad Foundation, was they told us that basically, picking co-founders is like picking a marriage partner, like a life partner, a spouse. And so the comment was basically, you should read Gottman, which is like the psychologist on like couples therapy and things like that. But that was basically the advice that Monad gave us. So thanks for that advice. The book is sitting on my table. I haven't read it, so.
No, me neither. I didn't hear that part on the Monad week, so it was a bit of a freestyle. But I just believe that like if you don't have a foundation that you can rely on somebody, plus don't have bad emotions with each other. So, for example, Johan, right, like my co-founder, he said that obviously he could make multiples probably in TradFi world salary-wise than what I would be making, given his experience, how special he is, and so on. But he said, I want to make 50-50. I want to have everything 50-50 to avoid this type of discussion. Who is doing more? Who is more involved in the project? And so on and so on. And like really, it makes the whole difference. So think twice or even a couple more times, who are you marrying? Because in the end, the connections that you like, everything is interconnected, right? Even to get somebody out of the company, it's a huge drama. Like investors will be pissed, your project will be gone, you will lose trust, there is no continuity. Like it's the worst thing, but it's also very hard to find a person like that. So there is no right or wrong here per se.
I love that. As we come to the top of the hour, so let's turn to a fun segment, which usually it's myself and Cholo getting peppered with these questions. So this segment, it's called the rapid fire round. We're just going to ask you 5-second response questions. So quick Q&A, whatever comes top of mind. Wojtek was not prepped for this, so this is a total impromptu. And I think usually we do two, so maybe we can do Wojtek and Cholo. So maybe it'll give you a few seconds to think about your responses. If you're all good at that, Cholo.
Yeah, I haven't seen the questions either, so I'm flying blind like you, Wojtek.
All right.
Okay.
Starting with the first one. Best Web3 founder.
Fuck.
Not present company
Keone.
included.
Sorry?
Keone. Let's say Keone.
Oh, now I can't copy. I mean, I'm a big Binance user, so I'm gonna say it's easy.
Nice
Okay,
ones.
that's cool.
What's one crypto term that's completely lost its meaning over different cycles?
WAGMI. I actually miss WAGMI a lot. I think we should bring it back because it's like it was overused back in the days and now nobody uses it, and it's like the thing of a past, but it was all about WAGMI back in the day, so that we all gonna make it, and we are sort of making it at the moment, depending how you look at it. So let's bring it back.
I think when, because it used to be when Lambo, when Moon. It used to be very fun. Now it's like when TGE, when airdrop, when token. It's now very like people demanding stuff from you. Before it used to be like a very fun cultural thing. Like we're gonna make like same as WAGMI, right? We're all gonna go to the moon. We're all gonna get a Lambo. Now it's like, when's my money coming to my wallet? So it's really lost its meaning.
When mainnet? Sorry,
Yeah,
Keanu.
exactly. That kind of stuff. It's like a demand now, not like a fun thing.
Most overused narrative in crypto today.
Stable coins.
Yeah, I was gonna say
Like,
institutions
come
are
on,
coming.
like it is super cool, but in the end, it's all about stable coins today. And I know they're also like, I'm not saying I know gaming is more exciting than stable coins, at least not at the moment. But let's aim for more than that. I think blockchain is so universal that we can create cool financial applications and products out of it.
Cholo?
Yeah, mine was institutions are coming. I mean, they're already here. With ETFs, with like banks allowing for crypto brokerages. I mean, they're already here. I mean, it's people just like looking for exit liquidity. Like, no one's gonna buy your like 500 coin market cap shitcoin. Definitely not institutions. So if you're looking for that bid to buy your bags, sorry to say, it's not gonna happen in this cycle at least.
Which crypto founder would make the best politician and why?
Ooh.
Think, which founders do I actually know? Because that's
Yeah, that's a tough one. Can I say Nayib Bukele? He's kind of a crypto founder and a politician. The president
that's
of
a
El
fair
Salvador.
point. Oh, I know, Brad Garlinghouse. Like, he's
Oh, that's a
perfect.
good one.
Like,
Yeah.
there is a mean way of saying his surname as Brad Lyinghouse. And politicians are great liars. I'm not saying he is, but he's perfect, right? Like, he looks like a politician. He can speak in a very articulate way for so many years. We are closing 2 deals behind the closed doors every week, right? To all of these financial institutions that we work with. And guess what? They are, after all of these years, finally doing something, right? So he delivered in the end. XRP to the moon.
I think one guy that's been popping out on my feed quite often recently. I think he's a good speaker. Is Tommy Lee. He's been shilling ETH to the moon. So good evangelist for ETH in the political space.
Are meme coins dead?
No, they're part of the culture and they will always come back, and some will just cement their way, like Dogecoin, that it's like a Bitcoin of meme coins, and why not to have it, right? It's not a big problem.
As a very long-term Doge holder and believer, I don't think meme coins will ever die. They're too, yeah, they're just part of the culture. Like, crypto wouldn't be crypto without meme coins. And yes, a lot of them will die, but a lot of them will stick around for a very long time.
I have to give a shameless plug here. For those of you that don't know, UDigital's meme coin is rwagme on nad.fun. Check it out on testnet. Check it out when we're live. Last question.
So you brought the WAGME back.
We're trying. We're trying hard. Good. We actually do believe we believe in WAGME, so we're trying to bring it back.
Okay, I'm happy.
Last question. Bitcoin prediction, price prediction for 2026.
End of 2026 or start?
End of 2026.
End of 2026. Ooh.
Or peak, which I hope is the end. Peak.
Oh, peak.
Quarter of a billion.
Quarter of a billion.
Quarter of a million. Sorry.
Very punchy.
No, $250,000. Sorry.
We have Kathy Wood this year. So.
Yeah, I would put it slightly higher, maybe 300K. But I think at the end, I think that by the end of 2026, it'll be back to like sub 100. But
nice.
Hot take.
But the volatility is also smoothing, right? So maybe the drawdowns of like 60-70% are more or less gone. We'll see.
Yeah, possible.
But million this cycle, that will be
yet.
way too much. It's a bit like in 2017, 2018, when it hit 20K, people were calling for 100K. So I think right now we'll get to this 200, 250, maybe 300, and then people will start calling 1 million, and then we wrap it up turbo.
Yeah, it took about how long? Maybe 5 years to get from 10K to 100K. So I think people saying that it's going to go from 100K to a million in a year don't really understand the history of Bitcoin. So yeah, there'll be some other drawdown to kind of like flush out some of the froth and leverage, I guess.
With that, let's wrap up the segment. You heard it here first. Bitcoin to 250 to 300 next year. So that brings us to the end of this one. Wojtek, this was awesome. Thank you for joining us. We always enjoy chopping up with you. Love your perspectives over the cycle. Love what you're building, and look forward to working with you in different capacities as we're trying to make yield products more sustainable, on chain. To our viewers, thanks everyone for staying with us for an hour. Thanks everyone for joining us 5 episodes in. We will continue to have different founders on the show. We've got a super fun slate, over the month of August. So stay tuned to our socials, check out what we have cooking. We hope you found something interesting here tonight. If you just found us or just hearing about Accountable or Mu Digital, please follow us, follow our X, follow our Discord. All of our handles are here. And join our waitlists. We're all launching soon, imminently. We're all excited about that. So keep tuned for what we'll be cooking in very short order. So that's it. That's a wrap for today. Thanks everyone for joining.
Thank you guys.
Thanks, Wojtek.
Thank you. See you. Bye bye.